Hey everyone, Safi Russell here, founder and CEO of SDR Consulting Inc. Today I want to talk about two basic topics. What is bookkeeping and what are tax write-offs? Bookkeeping is pretty much the tracking of the various transactions that come in and out of your business account. Income, expenses, equity transactions, loans, all of those various transaction types have different rules associated with them of how they're treated for tax purposes. And so your bookkeeping helps you see how your business is doing financially. It also determines how much taxes you end up paying. And so if those transactions are not properly identified, that can lead to overpaying or underpaying of taxes ultimately. And so it's important to know when that money comes in, is it income? Is it an equity transaction where you've invested money? Is it a loan? When that money goes out, is it an expense? Is it you paying yourself? Are you paying yourself properly? Um, is it a commission to someone else? Are there some reporting responsibilities related to that? So as you can see, it gets very detailed. And it's important to work with a professional to help you with your bookkeeping if you are not properly trained in managing it. Because yes, there's amazing software out there, but if you don't understand the basic underlying rules, and type of transactions that are out there, it's very easy to make errors. Let's talk about tax write-offs. A tax write-off is an expense you can take as a business owner because you had to run your business ultimately. Is it considered ordinary and necessary to run your business, right? And then if it is, there may be certain rules depending on the type of expense that it is. That's where we get into the tax side of things. But the first step is, was it necessary for your business? For example, if your business is remote where you provide virtual services, does it make sense to go out and purchase a business vehicle that's going to sit at your home all day and you write it off? It may not be considered ordinary and necessary for your line of business. Are you using that vehicle personally as well? Then it shouldn't be 100% write-off anyway, right? These are some of the things where we get into the rules and if it makes sense, all right? When it comes to tax write-offs, I want you to do something really simple. I want you to Google Schedule C, and I'm going to pull it up quickly here. Schedule C, not all businesses file this schedule, depends on your business structure, but it is a good starting point to get an idea of some of the common expenses that are out there. On a Schedule C, you're outlining the details of your business, the income that you've brought in, and then there's a list of expense categories here. We've got advertising, we've got commissions and fees, we've got legal and professional, insurance, travel, repairs and maintenance, supplies, and then it goes on from there. If it doesn't fit in one of those categories, you got a place here to list other expenses. Now, what is listed here should be reviewed and work with a professional. And I've seen some things listed here that are clearly not business. So the point of me bringing this up is that when you're asking yourself, I don't know what a write-off is, I want you to start there. I want you to start there with the Schedule C. And then also work with a professional who can definitely put together a bookkeeping platform with you. If you're going to manage it, fine, have them help you get set up on it and check on it maybe quarterly with you, which is something that we offer, or definitely have someone handle it for you full time. So I hope that quick video helped in covering what bookkeeping is in general and what tax write-offs are. For more details, definitely connect with me. Feel free to DM me or comment below next steps, and we'll talk more. Take care.